While crypto prices are in the toilet, crypto arbitrage has been living up to its reputation as a relative safe haven in times of stormy weather. Our next speaker at this inaugural Business Tech Future FinTech Conference is a qualified actuary. He's got a strong financial and risk management background, and he's really capitalized on this arbitrage opportunity over the last few years. Harry Scherzer, who's the Chief Executive Officer at Future Forex. Harry, really looking forward to learning a little bit more about crypto arbitrage, especially because we're in the midst of this crypto winter. And what we've seen is the returns in crypto arbitrage have been a safe haven. So the obvious starting point is, can you just explain the process of crypto arbitrage, which has obviously been gaining a lot of popularity lately, but how does it work?
Michael, firstly, great to chat to you again, and thanks very much to yourself and Business Tech for having me on and for inviting me. So essentially, I'll run through the process of crypto arbitrage, and it's actually simpler than people think. I find that people hear crypto arbitrage and they think it's going to be something extremely complex, but in truth, all that's really happening here is it's the purchase of cryptocurrencies abroad and the simultaneous sale of those same cryptocurrencies in South Africa at a profit. The reason that's possible is that in South Africa, cryptocurrencies like Bitcoin trade at a 2 to 3% premium compared to those abroad. So quite simply, crypto arbitrage is the process of sending dollars abroad, converting those dollars to cryptocurrencies, sending those cryptocurrencies to South Africa, and selling them in South Africa at a profit. And because of the cyclical nature, you can do this over and over again with the same Rand funds.
Yeah, rinse, wash, repeat. But why do cryptocurrencies locally sell at this 2 to 3% premium?
Yeah, it's a great question, Michael. And the reason is because of exchange controls in South Africa. So each South African individual has a total of 11 million Rand to send offshore per calendar year. You cannot exceed that no matter how rich, how poor you are. That is all you're entitled to. And so because of this, people are willing to pay a premium in South Africa to essentially have exposure to a global asset in Bitcoin without utilizing your allowance. And this creates the somewhat what I consider a natural equilibrium of a slight premium of cryptocurrencies in South Africa compared to those abroad.
And for as long as we've got that structural premium in place, it looks like the investment case, investment thesis is certainly very sound. What sort of returns can one expect per trade? And you said 2 to 3%. Put that in Rand terms for me. And how often are you trading, and can you trade?
So the 2 to 3% premium translates to, after third-party costs taken by the exchanges, by the banks to do the round trip of funds, the net profit to clients comes to between 1 and 1.5% at this level per trade, meaning that if you give 200,000 Rand, you're making between 2 and 3,000 Rand net per trade. Now, where the returns become exorbitant and extremely lucrative is in the fact that a trade can take place every couple of days, which means that up to this 11 million Rand total cumulative limit, you can be trading every couple of days. And that's why returns for Future Forex clients currently sits at around 80% annualized per annum. That's our average return, which obviously sounds excessive, but it's because of the cyclical nature. And you take that 200,000 Rand and repeat the process over and over and over again each year.
And that's obviously up to that 11 million Rand ceiling. I think we need to be chatting to the Reserve Bank about raising that ceiling, which hasn't been adjusted due to inflation. But you can, if you wanted to bulk up, you could trade on your own account and maybe trade on your spouse's account or a child's account. There are ways to increase that, aren't there?
Absolutely. What we find is our clients get through their 11 million Rand and very often send it to their spouse, to their husband or wife, and do another 11 million Rand. So per household, you're looking at 22 million Rands worth of trading. Now, let's just give this in Rand terms. In Rand terms, if you're making 1 to 1.5% per trade, you're looking at a cumulative amount of 100 to 200,000 Rand, call it very loosely, over the course of a year. That's what this opportunity is limited to. So make no mistake, Michael, while this is an incredibly lucrative opportunity at a very low risk, it's not something that you can retire on. It's not something that is going to mean you can quit your job. It's just a nice kicker in your portfolio whereby you can increase your returns by 100 to 200,000 rand each year per person. So per family, per couple, that's 200 to 400,000.
And clearly, if you have a pot of capital and you want to draw an income in retirement from it, you're not really going to be able to live on 200,000 rand a month, to your point. But it is a great kicker. What are the risks here? Because if one looks at what's happened to the crypto market at the moment, we've seen prices swing wildly in a matter of hours, let alone a couple of days. So isn't there a risk associated with buying at a particular price and then having to offload at another price? And how do you manage the risks?
Yeah, so I mentioned that it's low risk earlier, and I'll justify that now, because what it comes down to is typically in crypto arbitrage, the process is you send money abroad, you wait for the money to arrive. During that limited period, you're exposed to dollars, and maybe the dollar weakens, and by the time it arrives, it's not worth as much. By the same logic, you buy cryptocurrency abroad, and it may take a while for it to arrive in South Africa, typically half an hour to an hour. And maybe crypto decides to fall off a cliff in that half an hour, and now your money's worth less when it arrives in South Africa. So these are typical market risks associated with the arbitrage. But I'm very happy to say that Future Forex has a fully hedged investment solution, which has eliminated these risks entirely. And the way we do that is we effectively hold pools of US dollars abroad and cryptocurrency in South Africa, such that as we send clients money abroad, we're able to immediately execute the purchase of cryptocurrency abroad and the sale of cryptocurrency in South Africa to mean that there's a zero exposure and eliminate all market risks, which is why I say that this is extremely low risk. Now, the reason that I don't say this is zero risk, and in my view, no investment in the world is risk-free, the reason for that is there is a remaining third-party counterparty risk, right? In that we have to use third parties to do this process. An example is Mercantile Bank, which is Capitec's business division. In using Mercantile Bank, we assume that they're going to action a trade when we tell them to action a trade. Now, there's a very, very minor chance that they don't do that for whatever reason. They fail on their obligation, and then we'd be exposed temporarily. But in our tens of thousands of trades, this has never happened. We've never had a third party fail, which probably speaks to our extensive due diligence that we do on all our third parties. So I'd see this as an extremely minor risk and say this is not risk-free, but extremely low risk.
Absolutely. And I think one in any market is exposed to that kind of minor risk. If you're going into so-called risk-free unit trust money market funds, there is always that counterparty bank risk that is there, but extremely low. So what I'm hearing you say is that this recent chaos in the crypto market hasn't affected your clients' returns.
Yeah, it's incredible, Michael. I mean, the best advertising we could possibly do is a crypto crash of this magnitude, where we can continue to say that our clients are continually making healthy returns. It hasn't affected them at all. The arbitrage gap remains in place despite the movement. And so it almost goes to show that what I've been preaching since this company started has come into fruition now that crypto prices are in the sink.
You couldn't have asked for a better proof of concept. Now, what are you charging for facilitating this service? You're obviously not an NGO or a charity. What are your fees?
Yeah, so Michael, we don't charge a management fee. In fact, I personally have an issue with management fees in that sometimes I've seen it where asset managers perform poorly and they still take a fee on top of that. It leaves clients feeling, relatively down and that this isn't exactly fair. So instead of that, in line with our alignment with clients and transparency to clients, we only take a percentage of profits. The profit they make, we share in a percentage of that, and it creates a partnership sort of feel to the relationship between us and our clients. And that percentage of profits is on a sliding scale, whereby the more you invest per cycle, the lower it becomes. So it's a sliding scale of percentage of profits, and
it's alignment. Well, I like to hear that, because to me that is the way you align your own interests with that of the clients as well. And I couldn't agree with you more. There's nothing like feeling shortchanged by an asset manager who still takes their cut in an underperforming period. Now, if you look at the regulatory environment around this, are the regulators comfortable with this process? Have they been knocking on your door lately? What are the regulators saying?
Yeah, Michael. So it's an interesting one because I'll start with the short answer. The short answer is this is fully legal and the regulators are happy with it. But in a bit more depth, there are two cases whereby we've proven that the regulators are happy with it. The first is that if you look at the South African Reserve Bank's website, you'll see a frequently asked question about purchasing cryptocurrencies abroad, which is what arbitrage essentially does. And it quite clearly states from the Reserve Bank that individuals may use their SDA and FIA, which is that 11 million rand allowance I was chatting about, to purchase cryptocurrencies abroad. So that's a tick box from the Reserve Bank. Then on the SARS front, now in order to access, I should probably break this 11 million rand down into the two categories. There's a million rand no questions asked travel allowance that you can use. And then there's a 10 million rand that needs to be applied for. Now, a nice value add is that we do all the paperwork and do this as a complimentary service as Future Forex. We've got an in-house tax team, a partner tax practitioner that oversees that entire process for all our clients. And when submitting this to SARS, to the South African Revenue Service, when we submit this application, when it says, what is your reason for externalizing the funds? What's the investment, the nature of the investment? We write crypto arbitrage. We don't hide it. We're straight up with it and always prove it repeatedly, meaning that both SARS and SARB are happy with the process and it is fully legal.
And that's, again, why I think we should be lobbying and agitating for that limit to be increased, because, it just means more gets brought into the country, more gets spent and circulated locally, more taxes can be generated in the process. So it sounds like a win-win all round. How do listeners, if they want to find out more, how do they get started if they're interested in investing? I'm really pleased to hear that you offer all of that back-end admin-y type service, because that's the real headache that I think is a big friction point for most investors.
Tell me about it, myself included. I almost stopped doing the arbitrage personally when I realized how much of a headache it was, which is why I said we need to make this a fully passive investment whereby we can do everything for clients as far as possible. In terms of getting started, Michael, our clients can go to our website, which is futureforex.co.za. There's a register button, there's a get in touch button. If you would like one of our skilled consultants to give you a call and explain any personalized questions, hit that get in touch button and they'll happily give you a call. If you're ready to get going, you can click the register button and our team will take care of the rest.
Oh, fantastic. It just shows you what fintechs are doing in the crypto arbitrage space. Thank you very much, Harry Scherzer, Chief Executive Officer at Future Forex. Harry, as I said, is an actuary, got a strong financial and risk management background, and he's really found a quite niche combination of this technical ability from his actuarial background, as well as his really strong interpersonal skills in his time with business development. And it's a perfect engine for a fintech that is creating a very, very low risk opportunity for South African investors. Harry, thanks so much for your time.
Michael, thanks so much for having me. It was lovely to chat.